Alright, everybody, this is Multifamily Melvin with secretsofrealestatemillions.com, and I want to welcome you to another edition of Melvin's Minute. And in today's video, I wanted to go a little bit back to the basics. And I don't care where you're at in your investing life, or even in your profession or your sport, it's always good to go back to the basics. And today I want to take you back to the basics, and let's talk about why we should be looking at apartments as a part of our real estate investing portfolio, or even as part of our investing portfolio as a whole. And what I'm going to talk about today is really just my top 5 of why I believe apartments are just one of the top places to put your money, and where you can get the top returns. Well, let's talk about number 1. And as they say in my neck of the woods, cash is king, and with multifamily investing, cash flow is king. And when I talk about cash flow, every month those residents are going to be writing you checks to be living there. And every month you're going to have outflow as well, but at the end of the day, after you pay all your expenses and your mortgage, you should end up with a cash flow positive every single month. And we show you how to do that on secretsofrealestatemillions.com. And what we're targeting is really any property that's 10% plus or above. In other words, if you put down $10,000 on a property, at the end of the year you should have $1,000 in your pocket. Now, that might not excite you until I talk about the other things that I'm going to cover in this video. Alright, well, let's go on to number 2. Number 2, I'm going to talk about control. Alright, well, let's look at it versus the stock market. I invest 10 grand of my hard-earned money into a stock, and that CEO buys a brand new shiny jet to fly around in. I have no control. And it happens every day, folks. I mean, we've all seen the stories on the news. With apartments, you've got control. You've got control of who lives in your building. You've got control of where you're writing those checks to. I mean, you've got control of your vendors, or who's doing your maintenance, or who's hauling the garbage away. So you have some degree of control over your investment versus just kind of being at the whim of the market. And again, the next thing I want to talk about is appreciation. In talking about control, we've got a little bit of control over the appreciation of our property. Now, of course, we are going to be following market cycles just like anywhere else. We don't have really much control over that, but we do have control over raising our income and decreasing our expenses. And that's just key to proper property management. All right, well, let's talk about number 4. And of course, this is really our big payday when we sell, right? 5-10 years down the road. Number 4, let's talk about leverage. All right, well, as you all know, you can go out any day of the week, put down 20% on a property, and your bank will put up 80% of the purchase price. Where else can you do that? I mean, you can't buy stocks, you can't buy gold with somebody putting up that amount of money. Only in real estate that I know of. I mean, if you know of somewhere else, send me an email. But with multifamily investing, it's very easy to use the leverage. And the other cool thing about it is that these two, number 3 and 4, leverage and appreciation, work hand in hand. Because as far as the leverage, I might only put down 10% or even 20% on that property, but I get 100% of the appreciation. None of the appreciation goes into my banker's pocket. 100% goes into our pocket. How beautiful is that? It's a wonderful thing. All right, well, the last thing I wanted to cover is what I'm going to call stability and predictability. Multifamily, especially in comparison to, let's say, a retail commercial property investment vehicle. With multifamily, you've got stability. Everybody needs a roof over their head. And if you buy a property right, you're not going to have a problem filling those units. I mean, there are going to be market up cycles and down cycles, but for the most part, you're not going to have a problem filling those units. Now, if you buy a shopping mall, let's say, well, we've all driven by shopping malls where you've seen an empty spot and it's been empty for 6 months or maybe even a year in some cases. And guess who's paying the mortgage for that? The landlord, the investor. You just do not see that with multifamily. You just do not see these lengthy times of vacancy. So I like the stability and predictability. It's very easy to look at the previous owner's cash flow, vacancy rates, and looking at that crystal ball for the future. Well, not exactly, but it's easier to predict. So anyway, that's kind of my top 5. That's what I wanted to cover for you today. Like I say, it's always good to go back to the basics. And speaking of the basics, if you want great real estate tips just like this coming to your inbox every week, go ahead and head on over to secretsofrealestatemillions.com and go ahead and sign up for our free commercial and residential investing e-course. Of course, my cohort, Jerry Jones, covers a lot of these investment vehicles as well. But here, you're getting my video today. So, all right, well, thanks for joining me, everybody. And like I say, if you haven't, head on over to the website. Otherwise, have a great day, everybody. Talk to you soon. Bye-bye.